compared with the United States, Japan succeeded in financial crisis like what U.S. experienced in 2008. In 1990s, Bank of Japan provided the liquidity to those troubled banks. In the case of U.S., Federal Reserve did not act as a lender of last resort when Lehman Brothers. So I often wonder which is better, which is good.
That when that bubble burst, that was so severe. One of the economists from Japan told me that Japan nationwide, the property price fell like 80%. The whole country, I mean, not Tokyo, not Osaka, it's everywhere. So what did the central bank do together with the Ministry of Finance to prevent Japan's economy from falling into a negative territory? They still have a 1 to 2% growth rate, very low, but it's okay.
Yeah. In 1990s, Bank of Japan provided the liquidity to those troubled banks. And therefore, compared with the United States, Japan succeeded in financial crisis like what U.S. experienced in 2008. In the case of U.S., Federal Reserve did not act as a lender of last resort when Lehman Brothers became difficult situation. And because Federal Reserve did not act as a lender of last resort, financial system became almost near bankrupt, and its impact was so severe. So I often wonder which is better, which is good, either Bank of Japan or Federal Reserve, in the sense that we succeed in avoiding severe financial crisis. Bank of Japan did better thing. But just because US allowed severe financial crisis, politicians and general public came to realize injection of public money is needed. But in the case of Japan, just because Bank of Japan provided liquidity, people could not understand the need for injection of public money. And so in that sense, Bank of Japan was bad. So I wonder which is good.
But you did inject the liquidity into the banking system, right?
Yeah. And also, just liquidity is not enough. And at the end of the day, what is lacking is lack of capital, not necessarily lack of liquidity. As for policy responses after the bursting of bubble, we need two things. One is to prevent collapse of financial system. The other is macroeconomic stabilization. Of course, we have to avoid the bubble itself. But once the bubble was created, it is inevitable for bubble to burst some point in future. It means that banks accumulate huge amount of non-performing loan, which could wipe out the capital of banks. And if bank becomes undercapitalized, then we will be faced with the financial system instability. And the other thing is, anyway, the economy after bursting bubble is faced with low growth. Because at the end of the day, in the bubble period, excesses are accumulated. So excessive borrowing, excessive investment into equipment, and excessive employment. So once the bubble bursts, then those excesses have to be eliminated. The only way for those excesses to be eliminated is to spend less. Otherwise, excesses cannot be eliminated. In the case of Japan, the peak of bubble economy was recorded in 1991 in terms of GDP growth. And in the case of Western economies, it was 2006. We compare the path of GDP relative to the peak level of GDP in bubble period. Then Japan's performance is slightly better than that of United States. So even in the United States, GDP path is lower, and the degree of decline of GDP is larger in US and in Japan. So my answer to the question is low growth is inevitable once the bubble was created. But the second thing is, anyway, we have to avoid financial crisis.